How to protect your retiree savings from inflation. Imagine waking up one day to find that the money you saved 4 years now buys less than it did before. That's what inflation can do over time. It slowly chips away at your purchasing power. So, how can you keep your savings safe and even help them grow despite rising prices? Let's explore some proven ways to protect your money from inflation. First, think about diversifying your investments. Don't put all your money into one type of asset. Spread it across stocks, bonds, and real estate. Stocks tend to grow faster than inflation over the long run. Look for dividend-paying stocks, especially those with a history of increasing dividends each year. These can give you a steady income that helps cover rising costs. Real estate investments, like real estate investment trusts, often increase in value and rental income when inflation rises. That makes them a good way to preserve your savings. Next, consider inflation-protected securities. These are government bonds designed to keep pace with inflation. Treasury inflation-protected securities, or TIPS, adjust their principal value with inflation, so your income stays current. I-bonds are another option. They are government bonds that adjust their interest rates twice a year based on inflation. Both are low-risk choices that help your money keep its buying power. Adding commodities to your portfolio can also help. Commodities include things like gold, oil, and agricultural products. Their prices usually go up during inflationary times, but they can be volatile, so it's best to keep these investments a smaller part of your overall plan. Managing your bonds wisely is important too. Short-term bonds are less sensitive to interest rate changes caused by inflation. High-yield bonds can provide more income, but they also come with more risk. Some retirees use a strategy called a TIPS ladder, where they buy TIPS with different maturity dates. This creates a steady, inflation-adjusted income stream over time. Maximizing your contributions to tax-advantaged retirement accounts like 401ks and individual retirement accounts can give your savings a boost. These accounts grow tax-free or tax-deferred, helping your money grow faster and last longer. Finally, review your investment plan regularly with a financial advisor. As inflation trends change, your strategy should adapt too. Planning your budget for higher expenses is also wise. Set aside extra savings or adjust your spending to maintain your lifestyle. In summary, protecting your retiree savings from inflation involves diversifying your investments, including inflation-protected securities, considering commodities, making the most of tax-advantaged accounts, and reviewing your plan often. These steps help your savings last longer and support your financial stability throughout retirement.